Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, looking at the Canadian sector here, and we're going to do the usual name: CGC, MT, ACB, APH, OGI, EMC, and MJN. I was going to do CMD on here, but looking at that chart, such little price history, and it's all about $11 support there. Bulls need to keep holding $11, or we're going to see some further pullback to the downside. Just realize that we've got Monday off here in the U.S., as it is Martin Luther King Jr. Day, and you guys don't in Canada, so I will likely do a live stream in the morning for the open, and I'll likely start maybe right before the open, 15 minutes or so, and I'll just answer questions and look at whatever you guys want me to. I don't expect it to be a significant day trading opportunity kind of day. Those have been very limited in the sector recently, but can certainly come on for an hour or so and answer some questions, and we'll see how it goes. So check out my YouTube, as I will post, or it will come up that I'm live on that YouTube channel. So CGC, you can see the range is still tight. We did pull back a bit more than the bulls wanted to. And again, I feel that CGC and MT are kind of locked together, obviously, because of the pending deal. And they're seeing a little bit of a downside. We saw APH and ACB make much more bullish moves comparatively. And I feel like we're kind of stalling out here while we wait for that deal to be made or not. So that is why I think there has been a bit of a divergence between the normal strong correlation between all these names. So we did, that middle Bollinger Band on the daily is currently 963. And we did close just below it on Thursday, but we are back above that level of support. You can see Thursday, the long lower wick is the bulls buying the dip. And again, it all depends on what your time frame is on the trade. If you were looking short term, you would have likely been out when 965 broke, because that was then a lower high and a lower low over the past 2 weeks. But if you're in this for the long haul or looking for a month plus, we're still forming higher lows here. We had our low at 851, then 895, and Thursday a higher low at 941. We could pull all the way back to $9, and that's still a higher low compared to 895, and the uptrend that started in mid-December is still intact. You can see as we get tighter and tighter, look what the volume is doing. It's continuing to drop off. So we have a little spike, a drop off, a smaller spike, drop off, smaller spike. That is the pattern as we get tighter and tighter. Look at the Bollinger Bands get tighter and tighter. So we know a move is going to be imminent here, and the tighter we get, the sooner we get to that move. And again, a comparison I use is a rubber band. When you stretch it tighter and tighter, the difference between potential and kinetic energy, once that rubber band does snap, we get a sharp move and a spike in volume in one direction or the other, either a breakout or a breakdown. So as of right now, it would favor the bulls because of the overall longer-term trend is bullish, and even the past month, the trend is bullish as well. So the lower high pattern that has occurred since we hit that top is still in play. We can see lower high, another one, and now another one. And this is where ACB and APH differ from CGC, because they have already broken their high from December 14th. And I actually take that back. ACB has not done that yet. and we'll look at that in just a moment, but APH has. So that level is 1117 for CGC, and we're still 10% below that level. So if you're comparing where the stock was back in mid-December, APH is leaps and bounds ahead of CGC. Weekly time frame, no follow-through from this bullish candlestick. Again, as I say in every one of these videos, the longer-term bulls have absolutely nothing to worry about this consolidation. If we lose 765, then they need to start sweating, but we are very significantly above that level, and this is normal consolidation after a huge breakout. We can see the breakout in July consolidated for about 2 months before continuation, and it's now been 2 months of consolidation here. Doesn't mean we're about to break out, but just giving a reference that consolidation is normal and healthy after big, strong moves to the upside. If we were to see an increasing bearish volume dump off, we would know that that would be a much trickier situation for the bulls because it would not really give confidence. But this is building a base of support and giving confidence to the bulls. We had a bullish week last week, and we didn't really see much follow through this week. It's an inside candlestick, and an inside candlestick gave a bull signal 2 weeks ago. As soon as we broke, an inside candlestick is when the price range from the low to the high is completely within the candlestick before it. And once you get a break of the high or the low, that's your signal that the week is either going to be bullish or bearish. Obviously, it doesn't work all the time. It's just a tool that will give us the odds more likely than not. So as soon as 963 broke 2 weeks ago, that was the bull signal, and we made a run to 1039. Now we have another inside candlestick with a range of 941 to 1009, and we'll look to see if we can get a bull break or a bear break, but just a clear break of that inside candlestick as we head into next week. MT, very similar, but MT held the middle Bollinger Band on the daily on the back test. So again, here's that high of December 14th all the way up at 745. We are well below that level still forming lower highs on the daily chart, but we also have, from the end of December, higher lows very much intact. Looking down at 608, and now Thursday, that low of the lower wick hit the middle Bollinger Band at 651 and bounced off that support. Bulls are still in control, holding well. Middle Bollinger Band support's a good sign. We've got on the verge of a bull MAC decross here if we could see some upside back towards $7. And again, the Bollinger Bands are getting very tight as the volume completely drops off. So we know a move is imminent and approaching as we get tighter and tighter. Weekly time frame certainly favoring the bulls, holding exponential moving average support. Inside candlestick to watch next week with a range of 651 to 689 and looking for a clear break of these tightening daily channels. ACB, I did sell half of my position on January 10th when we were unable to break 264. I just wanted to lock in half that position, collect that profit, and either look to reload here or in another name. And I am keeping my eye on EMC for a potential reload, and APH. We'll look at both of those in just a minute. But you can see the bulls buying the dip in a big way on Thursday. Nice lower wick. Bounce off the 50-day moving average support. And we did see some follow-through on Friday. Bulls would have liked to see some more follow-through. We only broke the high by a penny, and that's not convincing on a $2.50 stock. But you can see the higher lows very much intact from early December. Another higher low there, another higher low now. So 237 is a key support going forward, and 264 is the high of December 14th. The bulls want to break this lower high pattern that is still intact from the highs back at the end of November. So the Bollinger Bands are not as tight here. You can see because we made this bull move over the past 2 weeks, we have the upper Bollinger Band ascending, and that is creating some room to the upside because we did reject. When we couldn't break 264, we topped out at 262, and we rejected right from that upper Bollinger Band. Normal healthy consolidation, a bit of a decrease in bear volume. Certainly not sweating anything for the bulls here as well. And if we break 237 and lose these moving average supports, then I will exit the second half of my position for a smaller profit and step back and reassess the situation and scout for another entry opportunity. But as of right now, I'm liking the way ACB is trading and the weekly time frame. Nice candlestick. It does show some indecision with the upper wick and the lower wick the same size. And we do have that little double top now, 264 and 262. So ideal scenario for the bulls is a clear break of 264, turn that into support, and the next resistance that we would be looking at, I'd be looking up at 285. We had a little double top there from the end of November. APH, why I like APH, it has shown the strongest move from the end of December. And we saw all these stocks start to see some uptrending at the same time, but look at the December 14th high of 556. We broke that level. So the lower high pattern from the high in late November has been broken. and we saw a close above the upper Bollinger Band, a lot of strength, but then we had earnings come out, and we saw a sell the news reaction to earnings and a pullback, but now the bulls are showing back up. Decreasing volume on that pullback, good sign for the bulls. I personally, we at the Chart Guys, we don't play earnings too much of a coin flip unless you're doing dozens of hours of fundamental analysis, and certainly in the Canadian sector, a lot harder to do because you don't have any competitors to be going off of in terms of, you know, history. You look at a retail stock, something that's been trading for a decade, and you can look at seasonality, and there are definite fundamentals that can factor into your decisions about earnings, but you need to be putting in lots of hours of research to have any kind of edge on earnings. And then there are even times where you get a beat on earnings, but the market will sell off. We see that time and time again where the reaction to the earnings does not align with what the earnings are telling us in terms of what was expected. So personally, we don't play earnings. I like to wait for the overreactions to one direction or the other. And in this instance, it would have been an overreaction to the downside in a sell the news scenario. And we quickly went from 521 and now we're back up in the 540s. So a nice 4% gain from those lows in just one day. So I am looking for an entry in APH or EMC. And I do like the fact that we are maintaining higher lows. And I do like the fact that we broke the high of December 14th already. Again, no other of these big names, these big five, have broken their high of December 14th. So what I would be looking at now in trying to time an entry is our 521 support. And if we approach down to 521, then we can start looking for an entry. And as I made a post where I like to make an entry close to a support level so I know a clear level that if it breaks, I know when to get out. And the closer I enter to that support level, the smaller the risk is going to be before I have to bail. So ideally, I would have liked an entry down in the low $5 range because we've bounced off of 502, 501, 506, and we know $5 is a nice psychological round number of support. We've got the 50-day and the middle Bollinger Band, both in the low $5 range. So there's all kinds of previous price history support where we have bounced off of in the past and moving average support. So if we were to break $5 psychological support, that would be an ideal exit. Or not an ideal exit, but a clear exit signal. So say I were to get in at 508, and let's say my stop loss is $4.99, I would risk $90 on every 1,000 shares that I had. So even if you don't like technical analysis, planning your trade and having a clear exit and having the levels all planned out, knowing exactly how much you're going to risk on the trade, is absolutely something you should practice, as well as keeping those emotions in check. So 521 is a clear support going forward. I will be watching the price as we are near that level and looking for a bullish entry potentially early next week. We'll have to see if we get follow through. We did see a strong close. Resistance is 544 and 573, and we're looking at 575, the high of December 1st. Weekly time frame, bulls showing up multiple weeks in a row now on increasing bull volume. Looking very nice after that double bottom. APH bulls in control. OGI is the lead bear, as we've been saying. Lower highs very clearly. And compare December 14th, and I keep comparing that level because it's a clear lower high with all these names. And you can see that was 350, and here we are very, very significantly below that level, about 20%. So we have not seen a break of this trend. We're approaching key support. We just bounced off of 261. Key support is down at 251 and 253. And that's a potential support level to be playing off of where you would make an entry down. Let's say you made an entry at 255 and had a stop loss at 249 or something along those lines. Or you could wait for this lower high pattern to break. And it would require a break of 285 at this point, a little double top back in early January, with that being our most recent lower high. 285 key resistance. Weekly time frame must hold this middle Bollinger Band of 260. It's going to be in the low 260s next week. On the verge of a bear break here, we have a bear TCG cross, which is when the 4 period crosses the 8 period to the downside. No other name has done that. No other name is battling to keep this middle Bollinger Band. And obviously, I know a lot of people like fundamentals out there. Well, the fundamentals of OGI clearly are being reflected in this chart, as I could not know anything about the fundamentals of OGI or the recall or anything. And I would look at these 5 names and I could easily say that OGI is the weakest. And then obviously it would be very clear why, because of the recall and all the negative news recently around the stock. EMC, blue sky breakout bull, and bulls in full control. So we hit a new all-time high of 446. We topped out there for a while. We broke it and saw a quick push to the upside up to 460. So you can see the strength that the bulls have whenever you get blue sky breakout with no previous price history resistance. So say you entered at 447. As soon as the all-time high broke, you're sitting there with your order filled out, just waiting to press enter, waiting for that number to break. So let's say you get in at 447. Instantly, you're seeing a 3% gain to the upside. I think that happened in about 5 minutes. And then there was profit taking off of that new all-time high. But entering on a bull break of a new all-time high does provide a nice day trading opportunity. We now have that resistance at 460. I'm looking at support down at 425 and 405. So bulls in a really nice uptrend here, and we are closing in on a tightening range. If we were to break 425, I would definitely take a step back and wait for a new support level to be found, because that would indicate to me that we likely see a bit more pullback than just a couple day pullback like we've been seeing after every higher high that we form here. So I'm going to be a little bit more patient in EMC. I would be more likely to enter APH as opposed to EMC at this point, because we're on the verge of a bear MACD cross. We're pretty overbought on the daily RSI, and I do think that we're going to see a bit more consolidation back down to the $4 level in the near term. Certainly wouldn't be making a bet that we are going to see that move to the downside, but I'm not confident enough in the current trend to make a bullish entry. And more often than not, technical analysis isn't just about looking for gains and moves to the upside. It's about keeping yourself out of high risk scenarios. By looking at technical analysis, you can factor in risk to reward and get a rough sense of that by knowing where your stop loss level would be, knowing how much you would risk on the trade, and knowing the potential reward and what your sell target would be. And as of right now, where we currently stand on this chart, I don't like the reward ratio to risk, because I feel like we are pretty close to a bear pullback, and the MACD is indicating that as well. Weekly time frame, very bullish, but there we go. Bearish reversal candlestick. That's a spinning top, and that indicates indecision at the top of an uptrend. We have not seen a red week here since we had that IPO week. And it wasn't an IPO. It was an initial offering once we had the reverse merger, but not going to get too picky with definitions here. If we see a red week and a loss of this weekly upper Bollinger Band, we know a bit more significant consolidation is coming. MJN. This is another one to look for bullish entry into. Very, very significant clear bull break. When we broke the high of December 14th, again, that's a key level I keep looking at, 162. That happened on January 4th. The bull break of the downtrend occurred then, and we saw 4 more days to the upside where the gains went from 165 to 190. Big time gains. That is roughly off the top of my head about 12%. And that is a nice move over 4 days. So now we're consolidating. And why am I looking for a bull entry here? Number one, this is a bull flag. It's a pattern that comes after a breakout that indicates healthy consolidation and then continuation. We have decreasing bear volume. That's exactly what the bulls want to see. Look at the bull volume compared to the bear volume. And there's a spinning top candlestick where we did start to pull back. So just like I pointed out on the weekly time frame for EMC, an upper Bollinger Band breakout, bearish reversal spinning top was confirmed, and then we got that little pullback. So support right now is 175. Resistance is up at 182 and 192. And here's another scenario where I could be looking for a bull entry in the upper 170s and out exit if 175 broke. Or if I wanted to be a bit more patient, I'd be looking down at support around 168, and then 162. That previous resistance should act as support as well. So Monday is going to be a pretty telling day, and this is going to be one we're going to be watching live along with everything else, whatever you guys want to watch. But I'm going to be interested in MJN. Very tight range, very low volume, and a break of this tightening range and low volume is going to be imminent early this coming week. Weekly time frame for MJN. Look at that clear bull break of the consolidation. This is a bearish doji of indecision after 2 bull weeks, so need to be cautious here. If we cannot break the high of the breakout back in November, $2, we formed a lower high at 192, then I would expect to consolidate and form a higher low. This is what I call reaching an equilibrium. It's a very common pattern. You can see it on Apple, Facebook, all the big stocks, where after a breakout, we consolidate and form a low. We then form a lower high, higher low, tightening range on decreasing volume, and we then see a clear break once that range gets really tight. So if we see a little bit more pullback and a break of 175, I would then be looking for a bull entry in the lower 160s. So again, early next week is going to be very telling in this name. And let's look at CMD, might as well, CMED. So you can see he's getting very tight here as well. 11.20 resistance the past 3 days we've been rejecting, unable to close above it, but $11 psychological support the past 4 days has been holding, and really 5 out of the last 7 days this support has been holding. And actually, we have not closed below $11 since the bulls started showing up after the first 2 days of trading. So a close below $11 is a very clear bear signal for the short term, and the bulls need to see a break of 11.25 and a close above 11.20. So again, I'll be live on Monday, most likely. Not going to fully commit here, but I'll certainly let everybody know. I appreciate you watching, and I will be happy to answer any questions on Monday. See you then.